largest real estate investment trust in my portfolio and almost the largest position across my entire portfolio altogether, Realty Income ticker symbol LO, which I currently have 2,876 shares of, seems to possibly be in some trouble, and this is because of some of the largest tenants within Realty Income's portfolio. Now in this video, we're going to go over exactly why Realty Income's tenants, some of the top tenants, could be facing some bigger trouble ahead and what that means for this REIT long term. And lastly, most importantly, if or if not, we should worry, especially I guess I'm talking for myself as a pretty large Realty Income holder, at least relatively speaking. So if you own Realty Income or have a plan on it, I'm just going to warn you, you're going to want to stick around to the end. So make sure to drop a like down below, subscribe, and let's get right into this one. I have some huge news for those ready to get serious about their dividend investing journey. I'm opening just 5 spots for one-on-one investing mentorship from me. I am a self-made 7-figure dividend investor who earns just shy of $7,000 per month in dividends at 31 years old. With this mentorship, you'll receive things like stock ideas, stock alerts when I buy and sell positions, access to my entire portfolio in real time, and I'm even more than happy to review your portfolio. You'll also receive my custom dividend tracker and A to Z dividend investing ebook for absolutely free. Like I said, this is only for 5 investors ready to take action, so don't miss out. Now, like I said, just as a quick flex, I personally have been buying Realty Income ever since around 2018. I've made plenty of videos about this in the past, so a lot of you guys know this whole thing. But across all my portfolios combined, I currently have around 2,876 shares of Realty Income, which honestly at this rate, if all goes well, I'll be hitting 3,000 shares before 2025. Now, across all my portfolios and with my yield on cost, I'm probably earning north of $750 to $800 every single month just from Realty Income, which has been amazing. And even though Realty Income's portfolio is extremely diversified with over 15,450 commercial properties, and these are rented out to over 1,500 different clients, Realty Income, which I honestly think of as the gold standard, still has some issues, which we're going to go through right here in a second. Now, it's of course not a major surprise that Realty Income does have some tenants that are struggling. Again, I've talked about these tenants on my videos personally in the past, and I've always sort of chalked up to the fact that Realty Income is more than diversified, and even if some of their tenants find themselves in trouble, Realty Income is going to have enough meat on the bone to survive. But I came across this article. This is from Jesse A. CFA. This is from seekinghelp.com, and he broke it down very, very well. It says Realty Income's biggest tenants are struggling. Should we buy, hold, or sell? Realty Income's top tenants are facing challenges and closing stores. This is one more sign that its portfolio quality may have degraded over the last years. Should you buy, sell, etc.? Let's see. So they went right into it and said Realty Income's 3 biggest tenants are the following: Walgreens, which I'm not a fan of, Dollar General, ticker symbol DG, and of course Dollar Tree, Family Dollar. And what do these 3 companies have in common? They have all suffered some terrible news as of lately, and it's not a good look for Realty Income. Walgreens recently announced that it was going to shut down up to a quarter of its stores as a part of a company-wide strategic review. And this caused its share price to crash to multi-year lows. And this is right around the time where I sold off the small position of Walgreens I was still holding. Some analysts now claim that the company could face bankruptcy in the future, just like its peer, Rite Aid, which filed Chapter 11 last October. This reminds me that Vici Property CEO told me this back in 2021 during an exclusive interview. If you look at drugstores, you have to ask the question, once Amazon gets truly serious about being an online pharmacy, what's the impact on Walgreens or CVS? And honestly, that's a pretty good point. Now, also similar to that, another one of their tenants, Dollar General or Family Dollar, plans to close 1,000 stores in the near term. More specifically, they plan to shut 600 Family Dollar stores this year and an additional 400 under both banners in the coming years as their leases gradually expire. We recently interviewed Agree Realty's ADC CEO, and we asked him what they thought about Dollar General's plan to sell Family Dollar. His response was simply, good luck. And this really embodies the struggle that the company is facing. Many of those stores are losing money. They are often stuck under long-term leases. They have been underinvested, and the competition has only grown bigger from Amazon and other offline discount stores. Their rival, 99 Cents, only filed bankruptcy earlier this year, citing shifting consumer demand, inflation. They then said Dollar General today is doing a lot better than its rival, but there are also growing concerns right now, and its share price has crashed around 50% over the past 2 years. Its profitability has been crashing because of the high inflation weighing down on the consumer. But the bigger long-term concern for me is Walmart, WMT. Could be going after Dollar General's business. Historically, Dollar General has done well because it would open small shops in less competitive areas. In our interview with the Agree Realty CEO explains, Dollar General is the food supplier in rural America. It really is. It's literally the sole general store in areas with zero competition from any other retail. They build at least 15 to 20 miles from the nearest Walmart and are an essential provider in rural Americas. If you could drive through a small town, honestly, a lot of times, all that you're going to see there is Dollar General. It's very true. But this could change in the future as Walmart and others are working hard on grocery delivery, and they are also developing smaller store concepts to bring the fight to Dollar General. My fear is that Walmart would win this battle because of course their scale, their powers with suppliers, etc. Now all this is a bad look for Realty Income. Historically, it has been perceived as high quality, which I personally think it is, but its top 2 tenants are facing issues and the biggest investments are in the pharmacies and dollar stores, which most people consider as low quality net lease investments. But is it on its own enough of a reason to sell Realty Income? The answer is no. Realty Income is well diversified. This is pretty much my response to whenever someone says anything about Realty Income. I always say it's very well diversified. It enjoys long leases and it generally owns better than average properties, which are less likely to be shut down, but it's not something to ignore either. Combining these 3 tenants, it makes up around 10% of the company's rental income. Moreover, Realty Income also has other struggling companies like AMC, Red Lobster, CVS in its top 20 clients. Again, we've talked about Realty Income so many times in the past, and if you go to the top 20 client list, it's not all perfect. I've never said it was, but again, for the most part, Realty Income is still rather strong. Now, they then said, I believe this reaffirms my previous point that Realty Income's portfolio quality has degraded over the years following their M&A deals, acquiring lower quality net lease peers like Spirit Realty, like VREIT. This is also evident if you compare Realty Income's occupancy rate to the ones of its peers. It is today the lowest in the net lease group and could continue to drop if we see more issues. This writer then said, but am I buying shares of Realty Income? I am not. I've owned in the past and be willing to own it again, but the discount relative to Agree Realty would need to be larger than that. Agree Realty, which I also have said is probably the gold standard as far as REITs go, enjoys many advantages that warrant an even larger premium in my opinion, and therefore I would buy more shares of Agree Realty instead. Now, I'll even honestly say, and this is someone as pretty much a lifelong Realty Income fan, comparing Realty Income's portfolio to Agree Realty's portfolio, they're both very, very high level in my opinion. There's some names in both that I'm not the biggest fan of, but if I could go back in time, which I can't, would I have bought a little bit more Agree Realty and maybe a little bit less of Realty Income? Well, what do you think? Now, with all that to say, I still think Realty Income, where it's been trading as of recently, is sort of priced in the fact and the reality that some of their top clients are potentially going to be in trouble in, say, the next 3 to 5 to 10 years. My best, most bullish, rosy outlook for this entire situation is that Realty Income, because of its size and because of its management, I have no fear that Realty Income, even if they have, let's say, a Dollar General or Walgreens, leave and vacate the commercial properties, I would truly not be surprised if Realty Income could replace them with higher quality tenants and maybe even at a rental increase. I really do have faith in Realty Income, again, which is why I own so many shares. Now, all that to say, like I said, there are certain names on this list that I wish were a little bit smaller of the diversification pool, and I'm also hopeful that during the next earnings, we're going to hear the CEO explain that they're going to be hopefully figuring out something when it comes to client diversification and some of the potential headwinds coming up here. Now, all that to say, and in an attempt to be completely transparent, with my 2,800 and so odd shares of Realty Income, I also sell cover calls on a large majority of my shares, which basically means that I'm also shorting the stock, holding it in a long position. So if Realty Income over the next, say, year or two trades sideways or even trades down a little bit, I'm personally going to get paid my juicy monthly dividend. And on top of it, I'm going to earn a ton of premium along the way. But longer term, I'm super bullish on Realty Income. I love commercial real estate, and I could not be happier that I'm inching closer and closer to 3,000 shares of Realty Income as of right now. But now, lastly, most importantly, I want to hear from you guys down below. When it comes to Realty Income, are you currently worried about the future of this REIT, or do you think for a longer term buy and hold position, do you think Realty Income will be just fine? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.